Okay, good afternoon, everybody. Welcome. Welcome to this last session of the day on land reform and transferability of rights. We have a great lineup of speakers. So we start with Tasso Adamopoulos. And so the session is organized with 20 minutes per speaker. And then we're going to have a Q&A on the paper right after, 5 minutes or so. And then at the end, we're going to have a bit of a buffer for more general discussion of additional questions. Or we can just go a bit earlier to the drinks if we want. OK? All right. So, Tasso?
OK, thank you very much. Thank you, everyone, for coming for this last session. Thank you for including the paper in the program. So this paper is joint work with my colleague at York University, Charan Chen. So let me start with the big picture. So we know that most of the world's poor people live in rural areas in developing countries, and they earn their living in agriculture. So this presents two fundamental challenges to inclusive prosperity. The first one is that they face a low agricultural productivity problem. If you look at agricultural productivity differences across countries, they're much larger than the aggregate productivity differences. The second is that they face persistent inequities within rural societies and along the rural-urban divide. So land sits right at the center of both of these challenges. So the level and its allocation shape production efficiency, and its ownership distribution matters for equity, and it matters also for rural to urban migration. So land has important implications for structural transformation, development, and welfare. Now, the central role of land is kind of evident from the widespread government programs across the developing world to reform it. We've seen over the past couple of days a lot of these: tenancy reforms, certification reforms, redistribution reforms. There's a large quantitative literature and empirical literature that focuses on the efficiency implications of land reforms, but often does not focus on equity or the insurance role of land. So we take a different perspective here. Our point of departure is that land is not only a factor of production, it's also an insurance asset. So the way to think about it is that when land rights are secure, that means that you can use land as collateral to ease liquidity constraints, but you can also, if you get hit by a negative shock, you can rent out land and receive rental income. So what those do is that they allow you to use land in order to smooth consumption across states of the world. So the contributions of this paper are two. So first is that we study jointly the efficiency and the distributional effects of land reforms. And the second is a methodological one, which is that we combine experimental evidence from an RCT along with a quantitative macroeconomic model to study these efficiency and distributional implications. So kind of the central overarching question that we're after is, do land policy reforms involve an equity efficiency trade-off? This is important not only in the context of land reforms, but in economics more generally. Okay, so here's a rundown of what we do in the paper. So first, we provide experimental evidence from a land titling intervention in the Philippines in order to quantify the role of equity and insurance. Second, we develop a unified general equilibrium model of inequality and productivity. So this model features incomplete insurance markets. So this allows us to capture the consumption smoothing role of land. It features production heterogeneity and land market frictions. So this allows us to capture the efficiency role of land. And it features structural change and selection, which allows us to capture the role of land for rural to urban migration. We take this model, we estimate it to the experimental data for the Philippines, and then we use it as a laboratory in order to assess quantitatively the efficiency and the equity implications of different land policy counterfactuals. And today I'm going to show you two, a land titling program and a redistributive land reform. So the paper is connected to a large literature, different strands. So one is on land and misallocation. The other one is on risk and consumption smoothing in rural economies. And the other one is incomplete macroeconomic models with incomplete markets and heterogeneous agents. So let me go to the experimental evidence first. So we study a land intervention, land titling intervention in the Philippines. So what happened was that researchers from the World Bank and the IPA, the Innovations for Policy Action, they partnered together with the Philippines government in order to run a randomized experiment to evaluate the impact of subdividing collective titles into individual titles that were given to beneficiaries with the idea of securing property rights. Just as a background, the land reform that happened in the Philippines happened in 1988. In order to speed up doing this redistribution in the 1990s, a lot of the land was given, some of it was given, half of it to individuals, redistributed, but the other half was given as collective titles, so to groups of individuals. This was in order to speed up the process. And then what the Department of Agrarian Reform was doing in the 2010s was that they were subdividing this now into individual titles. So this is where the intervention is that we're studying. So these researchers, what they did is that they randomly assigned these collective titles to treatment and control groups, where the treatment titles were going to be prioritized for subdivision and parcelization during the period of the study, and the control titles were going to be subdivided after the completion of the study. So the randomization exploits the timing of the intervention's rollout. So the baseline and end line are here. The study has rich information, collects rich information on ownership, on rentals, on income, consumption, and production. In order to motivate this focus on inequality, the first thing that I want to show you is that land ownership is very closely linked to consumption inequality. So what we're doing here is that we're taking all households and we are binning them into 5 percentile bins by owned land. And we're plotting mean consumption within each bin against the mean land-owned holdings. And you see that there's a very strong positive association. So this basically is telling you that the land-rich households are also consumption-rich. The land-poor are also consumption-poor. Interestingly, this is not special to the Philippines and to this particular study. We've looked at data from many other countries, and there's a very strong positive association between land ownership. I emphasize ownership because that's different than operational scale and consumption inequality. So this is our main motivation. So the first thing that we do is we estimate the impact of this land titling reform on land market outcomes. In particular, at the plot level, we do this, and by end line. In particular, whether the plot was rented out, whether the plot was sold, and whether the plot was tilled by the beneficiary. So we instrument take-up of treatment with random assignment to treatment in order to address compliance. So we identify causal effects on compliers. So these are late estimates, local average treatment effects. So what we find is that the take-up of titling increased land market activity by any metric in a statistically significant, in an economically meaningful way. Relative to the control means, the likelihood that a farmer would rent out their land or sell it doubled. So this shows already that this land titling improves the ability to transact on land. The next thing that we look at is what is the effect of this land titling intervention on inequality within beneficiary communities by looking at changes in within title consumption inequality. And we use here 5 different measures of consumption inequality. Again, these are late estimates. So what we find is that there's a significant decline in consumption inequality within titles, and these reductions are of the magnitude of 15 to 25% relative to the control means. So again, the titling reduces consumption inequality. The next thing that we look at is what is the effect of this land titling intervention on insurance and risk sharing within beneficiary communities. To answer this, we run a Townsend-type test, which is based on this idea that if you have full insurance, then household-level consumption should not respond at all to idiosyncratic income shocks. Even partial pass-through from income shocks to consumption is indicative of incomplete insurance. So we built on this idea in 2 ways. The first way that we built on it is that we examined whether the RCT had causal effects on providing additional insurance to those that were treated. And the second is that we are explicitly connecting the pass-through to the land ownership. Okay, so what do we find? So let me summarize. So we find that there is incomplete insurance. This is standard. In a lot of other rural settings, this is what people find. So there is incomplete insurance. The take-up of treatment leads to lower insurance by reducing the pass-through from income shocks to consumption. More land holdings, more owned land holdings means less pass-through. And the treatment particularly helps the land poor. So that's the triple interaction. Although this effect is not statistically significant, it's in the right direction. Okay, so what we're taking away from this is that land helps improve insurance and inequality. And next, what we want to do in order to study the aggregate and broader implications for efficiency and equity is to turn to a structural model. So our model is a model that studies jointly. It's a dynamic general equilibrium model that studies jointly inequality, productivity, and structural change. The model is a hybrid of an incomplete markets heterogeneous agent macro model and a span of control model featuring non-homothetic preferences. So there's 2 goods in the economy, an agricultural and a non-agricultural good. There's a low income elasticity for the agricultural good, which means that it's a necessity. So this is the structural change component. Workers that are heterogeneous with respect to their skills face an occupational choice where they choose to become either a worker or a farm operator. This is the selection component of the model. If they become a farm operator, they produce according to this production function that you see here, which is decreasing returns to scale. Gamma is called the span of control parameter. L bar is the amount of endowed land that you have. Think of that as your own land, the stuff that you own. S is your permanent productivity, so this allows us to think about production heterogeneity here, and Z is transitory productivity shocks. The way that I want you to think about these is that, let's say you get hit by a negative health shock, you break your lower back. That's what Z is. S is how good a farmer I am, okay? Importantly, you're not constrained to produce according to L bar because there's a land rental market. You can rent in or rent out part of your endowed land. That's the LR. It could be positive or negative depending on whether you're renting in or out. Let me talk about the markets. So as is a standard in these models, these incomplete market models, there's lack of insurance markets. So households cannot fully insure against shocks, and which means that they cannot fully smooth their consumption. They can invest in a risk-free asset A, but that has limited savings opportunities, so it has a low net return. You can borrow, but you're subject to liquidity constraints, and how tight these liquidity constraints are depend on the amount of the value of your own land that you can post as collateral. Theta captures how tight the financial frictions are. And finally, the model also has land market frictions. So farmers can adjust their scale different than what their own land is, but they are subject to frictions that affect both the extensive and the intensive margin of renting. So in this model, land does three things. It plays three roles. The first is that it's a factor of production. Standard, we've had that before. It's a collateralizable asset, and it's a source of rental income. That is really the new thing here, that it's a source of rental income. So if you have in this world more secure land rights, what is that going to do? First, it's going to relieve liquidity constraints because I can post my land as collateral, the amount of the land that I own. But also, if in the event of a negative shock, I'm able to rent out my land, and that also helps me cope with the shock. So both of these channels are going to enhance the ability of land to smooth consumption, and that's going to improve insurance. An important point in our model is that our model features decreasing relative risk aversion. What does that mean? It means that the relative risk aversion is higher the lower your income. So what happens here is that the utility cost of downside risk is going to be higher for households that are close to subsistence. So for these households, owning land is going to be particularly beneficial because it's basically offering them insurance. Okay? So that improves inequality and welfare. Okay, so we take this model, we estimate it to the experimental evidence that we have from the Philippines, and then we use it in order to conduct policy counterfactuals. So the first one that I'm going to show you is what we call the land certification reform. So in the model, if you have insecure property rights, that's going to show up as the land market frictions. So this experiment, what we're doing here is basically we're removing all the land market impediments, and we ask what's going to happen. So if you do that, you're going to have there's going to be a tremendous increase in land market activity along both the extensive and the intensive margin. There's going to be a drop in the number of farm operators, and there's going to be an improvement in the average quality of operators because of improved selection. These channels are going to lead to an increase in agricultural productivity by 70%. Interestingly, this is also going to reduce cross-sectional consumption inequality, because what you're going to have is that there's going to be an increase in consumption for all households, but the poorest households are going to increase their consumption 5 times more than the richest households. The reason that this happens in the model is because rental income is operating as an insurance device. So suppose that I get hit by a negative productivity shock, I break my lower back, I can't operate the land anymore, I can still rent the land out, and I can collect income, and that income is going to help me smooth my consumption. The next reform that we do is an egalitarian land reform. So here we are redistributing the land such that everyone has the same L bar, but we are imposing a ban on land market transactions. So what's going to happen here is that agricultural productivity is going to go down because there's going to be land misallocation, but also there's going to be more people that are going to stay in the agricultural sector. And interestingly, even though this is a redistributive reform, it's going to exacerbate consumption inequality. It's going to make it worse. The reason is that there is a ban on land transfers. And if I'm a low productivity guy, I'm making more from renting out my land and collecting rental income than making profit from operating the land myself. And when you have a ban on land transactions, you're losing that insurance mechanism for land. So let me conclude with some takeaways. So the first takeaway is that land is not just a factor of production, the way that we used to think of and think only about the efficiency implications. It's also an insurance asset. If you secure property rights, that's a win-win. Why? Because it's going to improve efficiency and it's going to improve equity. If you do a redistributive reform, but you don't allow the land market to work, that's going to backfire. That's going to worsen inequality. So what I wanted to leave you with is that what matters is not redistribution per se. What matters is whether you allow land markets and insurance mechanisms to operate.
Great, thank you very much. And let's open for questions on this paper.
Good afternoon. I'm Angela. I'm from the Philippines, and we're working on the Comprehensive Agrarian Reform Program. My question is, in your study, did you also take into consideration if land size an effect on the income or the consumption of the rich and poor households? That's all.
So we took into account the size of the land, yes. So in our results that we estimated, we explicitly look at these income shocks. So and what we want to see there is whether these income shocks are going to pass through into consumption. So if I get hit by a negative income shock, is that going to worsen my consumption? If there is an insurance mechanism, it shouldn't. So what we find is that the more land you have, the less that pass-through is going to happen.
Yeah, can you give a bit more details on how the land market works in the paper? Like what's the market clearing condition there, and how the trades are happening?
Yes. So the land market, so the land market clears. So there's two frictions in the model. So one is a fixed cost. The way that we think about this is that it regulates the extensive margin, how many farmers will actually trade. The second is a quadratic adjustment cost that is proportional to the amount of land rentals. We think of this as capturing the intensive margin. So conditional on trading, how much land are you going to trade? And we target both of those from the baseline data from the RCT in the Philippines.
Just a clarifying question. So in the RCT, how was the collective title distributed among different households? Like, where's the...
You mean within the collective title?
Yeah, within the collective title, because I'm a little confused about where the inequality came from in the...
Yes.
Yeah.
So within the way that these collective titles worked when they were given out in the 1990s, it was not that everyone had the same amount of land. So within that collective title, these were not official boundaries, but you could have had a different amount of land, that parcel that you were operating within that location than I did. So there was inequality, and we actually target the model exactly to that inequality, to the within title inequality back in the 1990s. So what the land titling does is that basically it makes this parcelization official. If there's any boundary disputes, they're settled. So everything is now clear-cut, demarcated, and you get basically possession of what you were already cultivating.
Yeah, another clarification question. So in the model, how do you measure the consumption? Is it utility wise, or is like a hard consumption wise, like what the data shows?
So in the model, yes. So the model, the consumption is an aggregate. It's a basket of agricultural consumption and non-agricultural consumption. So when we talk about welfare and consumption in the model, we mean that aggregate basket. So it's like, in the national accounts, when we talk about consumption in the national accounts, it includes everything. So that's the counterpart in the model.
So you already taken into consider the relative price stuff?
Yes, definitely.
Okay, got it. Yeah.
So this is equilibrium comparisons.
Maybe I'll ask a question. So I wonder if this is insurance or intertemporal transfer. Like when I think of the 1,000 stuff, I think of something that allows me to smooth consumption, while here it's really I'm transferring income from tomorrow to today because I'm renting out, so I'm not producing in the upcoming season. So there's this intertemporal, it's closer to borrowing than to insurance. And a somewhat related point, econometrically, like would the rental income enter your Y Or should I think of your Y as purely production income?
It does not enter. So I'm thinking how we estimate it. So it does not enter. It is purely income based on producing and selling your output.
One last question.
Let me just focus on this policy design matters, your last conclusion. Where there is land inequality, the easiest fix seems to be redistribution, but that affects efficiency. And again, at the same time, this inefficiency problem would, again, promote a government for liberal market, and that would also bring, again, because the efficient would collect and accumulate land, and then that brings land accumulation and entails inequality, especially this is a phenomenon in sub-Saharan Africa. How would we get from this vicious circle into some kind of maybe virtuous circle?
So are you asking about this particular egalitarian reform that we did?
It's a general question, basically, building on your last conclusion, policy design matters.
Yes, okay, I see. Yes, so if you do a redistributive reform, but you do not impose a ban on land market transactions, you could find yourself in a situation where you're worsening efficiency, but you're improving equity. So there are configurations here where you get this, connecting it to my initial question, you do get an equity efficiency trade-off. But the ones that I showed you, they involve either both improving efficiency and equity or both worsening it.
Okay.
So in terms of designing, you want to make the land market work. One of the things that happened in the Philippines when the initial reform happened, and is still even for this, is that if they give you the land title, for 10 years you're not allowed to transact on that title. You can't lease it, transfer it, sell it to anyone else. So that means that the ownership scale is the operational scale.
Okay, I think we should move to the next paper. Thanks very much, Tasso. Next, Federico.
Right, thank you very much for including the paper in the program. This is joint work with Dani Jaimovic, Ramiro Barrera, and Robert Hellmeyer. So most countries impose one or other form of restrictions to individual property rights, and these restrictions have been imposed to protect the land, to avoid its fractionalization, and to provide a territorial base for the preservation of culture. But we know for a lot of research that these restrictions probably do carry some economic cost. So this opens up kind of a classical dilemma in how we regulate indigenous property rights. What is the right way of regulating it? And instead of thinking of two polar cases, with one case being the collective land that cannot be transferred, cannot be mortgaged, and the other extreme being the full property rights, I'd like to think of a continuum policy space, where actually is where most countries sit. They do play around with different instruments, different legal configurations to actually navigate this tension. And I will not go over all of these cases in my 20 minutes. What I want to highlight here is that the case I bring here, that is the last case, the case of Chile, will probably get you as close as you can get in the world to a configuration where there is protection, but it gets really close to private property rights. So what we're going to be comparing in Chile is the case of tierras indígenas, indigenous lands, that are private, but they do have some restrictions, which I will explain in detail in a second, and the other lands that are fully private property rights for indigenous people. That's the comparison we wanna make in this paper. How do we position with the literature? There's a large literature in property rights. Well, we all know, of course. There's a smaller but growing literature that is specific about indigenous people. And several studies have found negative impacts of severe restrictions to property rights in indigenous people, which is not a big surprise given the full picture of the literature. Most of the evidence comes from the global north, from tribal ownership in the US, and trust status also in the US and in Canada. However, the literature has also shown that cases where these restrictions have been lifted have led to this huge fragmentation of the indigenous territory and loss of land. Less is known about whether other types of restrictions that are actually not severe, that are like light touch restrictions, can actually hit a sweet spot where we do avoid the fragmentation of land, but at the same time, we provide to indigenous people with an asset that is valuable and can actually help to lift these people that are overrepresented among the poor out of poverty. So the main research question here is what are the costs and benefits of restrictions on individual property rights over indigenous land? One is do the jure restrictions, and this I think is an interesting part of the paper. We can make this distinction. I will explain that in a second. But first, just the fact of, by the law, defining a piece of land as indigenous and having some restrictions, do that already impose economic costs? And does it have benefits in terms of protecting the land? And then, on top of that, if you enforce that, does that add additional costs? And is the enforcement mechanism important to actually realizing the benefits you want to realize? That's our kind of guiding questions for this research. The context, I'm taking you to Chile, to the Mapuche people. The Mapuche people were not conquered by the Spanish crown, so in some sense, their process of colonization is more similar to indigenous people here in the US and Canada. They were forced to settle in close to 3,000 reservations in the late 19th century. Then, during basically the next century, the reservation land that were collective titles were allotted into individual lands. Today, Mapuche people are about 1.8 million people, reach about 10% of the population. In 1983, the current indigenous law was enacted, and this law defined indigenous land. Indigenous land are mostly, and that is how we are going to operationalize it in this paper, land that falls within the former reservation, historical reservation territories that, remember, they are not anymore collective land titles. These are individual property rights there. And what are the restrictions? They cannot be sold, they cannot be leased for a long term or mortgaged, but here's the trick, to people outside the ethnic group. So inside the ethnic group, they're totally private property rights. So what they're doing, they're basically closing the market. The idea is we want the land to be Mapuche, but we want also the land to be more efficient, to Mapuche people to actually, entrepreneurs being able to buy land. So that's kind of the formula that they got to. Now, one thing is what the law says, but you all know that land registry can be pretty messy. So the legislator had to create like a mechanism to make this happen. What they created a separate registry. This registry runs in parallel with the official land registry that is called the Public Registry of Indigenous Territories. That's the translation to English. And the indigenous agency named CONADI, created by the same law, was charged with the tremendous task of actually creating this registry ex officio. That is, going to the land registries in every town, seeing which land falls within the historical indigenous boundaries, but by the time, of course, they were not digitized, and making all this process. They were never really empowered with the resources to do so, so the same agency estimates by 2023 that only half of the land that is by law indigenous is actually on the registry. And this is what we're going to be exploiting because it opens this very interesting research opportunity because this huge wedge between what is de jure protected, what the law says should be protected, and what is actually enforceable through the registry. This is our study region. So I'll walk you through the data, the main data sources here. First, we are going to use transaction data, and this data is going to be used to assess the cost of de jure protections. Okay, we got 96% of Araucanía land transactions, and we can georeference them through the registry. Araucanía is, well, you have Chile there for context. Araucanía is the gray out region, and that's all the municipalities within Araucanía. Now, throughout most of the paper, actually, we're going to be focusing on a smaller region where we have very rich data on property registry that allow us to actually reconstruct the history of property rights. That would be for a comuna and 5 other municipalities. Is the red one there and the blue dashed slash ones. How this registry looks like is the index of the property registry. So it tells you each entry is a share over a plot. Okay, and that share can have several owners. We know the owners. We have the owners' names. It also is very rich in the sense that it can be intertemporally linked because each entry says which entry it supersedes and which entry supersedes the entry. The only challenge that we solve through a method is that we don't know exactly each share, what is the fraction of the land it owns. So we made a simple assumption. We basically made equal split. We pick a pointing line from where we pivot to reconstruct the history. And then every time there's a split in property rights, we basically divide that one area by half. And we verified with a georeference sample that actually that simple assumption does a great job. We are within 1 percentage point in terms of indigenous ownership. And we call the method the time traveling, or also the DeLorean if you prefer, like whatever. And also one other thing here, you can see the reservations. That would be what is defined de jure to be indigenous in kind of light polygons, white polygons within Araucanía. And you can see that actually the region that we have really sits at the heart of the indigenous territory. Other inputs we use, we have the pre-registry that was given by CONADI. We have Mapuche surnames because we need to assign ethnicity based on surnames. And we also validate that approach with an administrative registry from CONADI with all Mapuche people that are officially certified as Mapuche to access some benefits from the state. We don't use that to assign ethnicity because it's a cross-section and would introduce some biases when trying to assign ethnicity to someone from the 1990s that might be dead by now. But we use it to validate the Mapuche surname assignment, and it works pretty well. Then we have a sample of parcels from all of Araucanía that we're going to use to assess the economic cost of de jure protections. And we are going to make a focus on some plots from the Temuco registry. We are going to georeference those to get at the economic cost of de jure protections. I will talk more about that when the results come. Okay, so results. First, let's start with something very descriptive. If the law had been implemented perfectly, we would expect basically 0 loss of Mapuche land. But of course, lawyers are super creative, and there's tons of loopholes. So starting because the pre-registry is not fully, it's not full. So what you see is actually there is a substantial loss of Mapuche ownership. This is a region, I should have said that, but actually the Temuco is the capital region. So there's a big city there. So it's a region subject to a lot of urban pressure. And this is reflected here. We see a Mapuche ownership going from about 92 to 86 percentage point in Temuco, where we have kind of the very long-term series, which is a substantial loss. And at the same time, on the right, you see that the coverage of this registry that is needed, we hypothesize is very important to enforce the law, is also eroding very fast. It's going from a coverage of about 80% of hectares that are covered in the registry to only 40%. So something is going on that the land is kind of slipping away of the registry that is useful to enforce the law. So we're gonna see that in more detail in a second. Now let's go to some causal identifications. So first, let's see if the de jure protections are actually delivering some protection, like the goal of the policy, right? So how do we do this? We take a population of properties that were active, that is all the registries that were valid in 1979, that is the year we're going to pivot our DeLorean. Then treated properties are within reservations, but that were allotted to individual property rights before 1979. And this is important because there was a 20-sale ban on allotted plots, something similar to the context we saw on the Philippines. So actually, if you take the ones that are allotted after, they were already in a different regime to the controls, which we draw from outside reservations, okay? Of course, those are very different parcels, so what we do is that we do a PSM matching. The most important variable we want to match is actually ethnicity. So we're comparing indigenous plots in reservations that would get de jure restricted in 1993, with also similar plots outside reservations also owned by indigenous people that didn't get those restrictions. So we have a pretty clean diff and diff, okay? And then we run the diff and diff. Temuco is the most interesting case because we can see the full-time series. And here we are omitting the dummy from 1990 because actually the bill was introduced to Congress in 1991, right? So you may expect some anticipation effect, which we actually see. And you see this big jump right in 1991 when the bill was introduced to Congress on the fraction of Mapuche ownership, which signals that the fact that the law was about to come was enough to deter non-Mapuche people from engaging in business here. They didn't want to get into that land that would get eventually protected and restricted. Also, interesting thing is that you can see that this actually opens a wedge, and it's pretty large. We saw a 6 percentage point fall over the whole period, and this means that the protection actually kind of would close that gap, right? Or closes the gap. But you see that at the end of the period, it's kind of flattening up, which is consistent with the registry, with the PRIT, losing power, right? The PRIT is not able to make this law enforceable anymore, so now they seem to be following more parallel trends. Now let's go to the economic cost of de jure restrictions. So what do we do here? We're going to focus, as this is a peri-urban area, the most relevant value of land is actually making it urban, right? So what do we have here is a regression. We're going to interact suitability for urban conversion, which is basically distance in minutes to the city center. And we are going to be interacted that with a measure of urban rents, which is basically, as we have transaction data, is transaction prices in the city core, okay? And then see if that translates differently in TDM. TDM are the restricted lands. TDM is basically reservations versus non-TDM. And this is I find it very striking because when you look at the price, so this is the price of the peri-urban land. When you are getting closer to the city center and you are in a non-TDM and you have kind of a positive shock in urban rents, that translates pretty neatly to the price you can charge of that value. But this is all agricultural land, so this is all in the urban literature, it's called like the urban premia, is the option value of converting your plot. Well, you see a complete flat, even slightly negative, but not significant relationship in the protected land, the second row. And then you see the opposite in quantities. What this speaks to a steeper slope of supply for urban land in non-TDM land compared to TDM land, which is consistent with this urban premium history, where basically we're arguing that the restrictions are extinguishing the urban premia in these lands. Why that happens? Basically, you are restricting the market to a much poorer pool of buyers. That poorer pool of buyers can finance cheaper housing, right? So the urban premium is cheaper because you cannot access to the more fancy urban development and commercial development. Okay, so far, what do we have? We have that the jure protections have worked, but they have come at a cost. Maybe what you would all expect. Now let's go to what the PRIT is actually doing. And here we focus on something that is a very important moment in the life of any property, which is inheritance, right? So the population of this regression is successions within reservations. So we are focusing now on only the jure protected land. that are the first successions since 1993. That is arguably more exogenous because it's the death of the owner and there's not much strategic consideration at that point. The treated is the ones that are registered and the controls on the ones that are not registered in this PRIT registry. For the, that is the de facto enforcement. So this captures this more exogenous effort of the government to actually ex officio register these properties. And we will run a staggered diff in diff and focus on several outcomes of interest. One of them is, okay, when the owner dies and the land is inherited, is it actually transferred? And you see very similar trends in the PRIT versus non-PRIT. This means that in terms of closing the market, well, you're closing the market to still like 1.6 million people. So there's still enough people to buy your land when you have a succession. Okay, so there are no costs imposed by the PRIT in terms of making the land transferable at a critical juncture of the property history. But when we look at the fraction of indigenous owners, actually the PRIT is very important. When for plots that are not in the PRIT, they lose about 16 percentage points of indigenous owner versus the ones that are in the PRIT are losing half, 8 percentage points. And finally, this is the culprit of why the PRIT is losing track. When a plot is inherited and is in the PRIT, then the subplots that are registered later are lost from the PRIT registry. So that's kind of a very actionable policy recommendation. And then we also measure, finally, try to measure the economic cost of these de facto restrictions on top of the de jure restrictions. And we tried really hard. We have two identification strategies that are quite different. First, a very traditional same owner strategy where we have owners that have both a PRIT and non-PRIT plot, and we measure difference in land cover, land productivity as proxy by EVI, measured from satellite imagery. We have no effects, and also actually the standard errors are quite small, so we can pretty surely discard any relevant effects on productivity. And we do a similar exercise with successions, georeferencing a PSM match sample of successions to see if there are different trajectories of productivity and land cover when they are in the PRIT versus they are not in the PRIT. Again, we find no difference. So to conclude, this is a bank paper. I always wanted to have a bank paper. Why is a bank paper? Because basically you go all the way or you don't do it, right? What we find is that, and in some sense, unfortunately, we're heading to the worst case scenario, right? Because once you define some piece of land as indigenous and it has some restrictions, that is enough to spook investors, right? People, even if it is imperfectly enforced, people won't want to get into a land that might be enforced in the future. So all the economic costs are paid just by the fact of the law defining certain lands as belonging to a different regime that does have some restrictions. Now, you're doing that because you want to obtain something as a society. You want to get protection for indigenous people. But to get that protection, actually, you have to enforce the law, right? So the PRIT plays a critical role in realizing the benefits in terms of protection of the law. And as far as we tried hard, we didn't find any economic burden of the registry itself on top of the de jure protections. So you either decide as a society, okay, we're not going to protect, so we actually don't get the economic cost, or you do the restrictions legally and you actually enforce them because you already paid the economic cost when defining the law, so you better enforce it to also get the protection. So that's our, we think, very actionable piece of policy recommendation that comes up from our paper. Thank you very much.
Thank you very much. Questions? Go ahead. Yeah.
Thank you. Thank you for your presentation. Very interesting. I'm Fernando Manrique, property registrar from Spain. You have talked about the public registry of indigenous territories, the PRIT. what's the connection between this registry and the property registry, the official property registry in Chile, the Registro de la Propiedad? Which is the connection? Are the same registry, have the same principle of inscription, legitimation, priority is working in this registry? Thank you.
Should I answer right away, or collect some?
You can answer right
Okay.
away, yeah.
Well, that's a critical part of the mess that we have here. It's a different registry, and actually it really doesn't speak very well with the traditional registry. The traditional registry in Chile is run. I don't know how it is in Spain, but it is decentralized. So it's run by each township. There's not such thing as a Chilean registry you can actually query, and the law didn't make it a legal obligation of the official registry to actually make all the investigation that is required to define if a property is indigenous or not. And this is important to stress because the law defines a very high standard. It's difficult. You have to seek a property and realize where it's located, and also have to define the indigeneity of the owner at a certain point in time. All those play a role, and that is a type of inquiry that cannot be put on the land registry by law. So that means that they both don't really communicate. And that explains why, when you have a succession, and the plots that are then registered are not really part of the indigenous registry.
All right, so, and then who proves the ownership? Which of the both registries has the official
none
proof
of them,
for the property of the
none
land?
of them prove it. So the PRIT registry is considered, basically, if a property is in the PRIT registry, that's considered enough evidence that the property is indigenous. If a property is not in the registry, that does not prove that it's not indigenous. That is the legal status, which creates, as you can imagine, a lot of uncertainty in the whole region, right? Because any land could be, in principle, be indigenous.
Great, thanks. I probably just missed this as just a clarification, but in terms of like selection into land registration here, like you talked about kind of a limited administrative capacity and stuff in terms of like the incomplete registries. How much of this is sort of targeting by officials in terms of registering land plots versus what discretion do landowners have to select into being covered by the PREACH or the other kind of registries in the setting?
So in the first phase, when it was ex officio, basically this was the CONADI doing the work of registering. That was basically, there was no much ownership. It is not a voluntary process. You don't choose to be part of the registry. If you're indigenous and you are in this land, you ought to be in the registry. We haven't found any strong determinants that would speak to some sort of political economy story of which land gets into this first wave or not. And that's why we actually, for identification, are focusing on successions that are the first event in the property history since 1993. Because we think that that process was a bit kind of very ad hoc. It was just limited by the administrative capacity.
I have two questions very quick, because, and of course, it's very much like the run in Mexico, which is another indigenous registry. So I think the question, and of course, what you're saying is the updating does not happen and the cost of enforcement. I mean, you're not calculating the cost of enforcement. So the question is, why is it not linked to the civil registry? Because if you have the PRIT linked to the civil registry, you will automatically register a succession, and then it will be automatically stay in the registry.
Like, why is not the case?
Yes.
Honestly, I don't know why it's not linked like that. The process was set like this, and I know that it has been suggested that it should be linked. But I'm sorry, I don't have a better answer, but I honestly don't know why.
Was there a question on that side? No? Okay, then thanks very much.
Okay, thank you.
Next we have Alessandro presenting.
Good Good afternoon. Thank you for having me. My name is Alessandro Schioppa. This is a joint work with David Wooper. I'm going to present the paper, Mind the Gap, Land Redistribution and the Economic Impact of Incomplete Property Rights. I'm going to start with a puzzle that I've actually heard a few times during these couple of days. Japan in 1947 redistributed 30% of land with full individual titles. Land was fully alienable. As the story goes, rapid productivity gains, classic story of structural transformation follows. Zimbabwe in 2000, similar scale, no secure property rights to beneficiaries, agricultural collapse, persistent output decline. So the story is, actually the question is, why do redistributive reforms sometimes raise productivity and sometimes destroy it? This paper sits at the confluence of a few pieces of literature, the classic land reform and development literature, which uses usually quasi-experimental studies. Two papers that I know of that tackle this question from a cross-country perspective. Bhattacharya and colleagues assemble a global data set, but they do not measure intensity, hence the amount of land that was redistributed, nor the property rights, nor at inception, nor throughout the history of the redistributed land. Mitra and colleagues using Bhattacharya's data set document average associations, but without being, well, forcibly agnostic about property rights heterogeneity or redistribution intensity. And we touch upon the misallocation literature in agriculture. And finally, we borrow very strongly from Michael Albertus, who develops and codes the concept of property rights gap in Latin America, and we basically extend his data set globally and link it to agricultural productivity outcomes. What this paper brings is cross-country panel of 163 countries between the year 1900 and 2010. We code for every country year pair the intensity of distribution, so the amount of hectares that were redistributed, and the property rights regime governing redistributed land. A small caveat for this presentation, I will only be talking about property rights regimes at reform onset. We are working on then changes in property rights regime. We classify, following, again, Michael Albertus, classification follows a full rights, partial rights, no rights regime, and we follow a bundle of rights approach. So for every country year, we develop a scoring system tracking formalization, defensibility, and alienability, and then through an algorithm that I won't explain here, the reform ends up in one of these categories that I just mentioned. This is the first figure I'd like to point the attention to. This is the cumulative amount of redistributed land between 1900 and 2010. It's 33% of agricultural land was redistributed over a span of 110 years. To go a bit more into detail, on the left we have Peru. Red line indicates the beginning of the reform period. One reform, quick. In Zimbabwe, on the right, we have had two reform periods, one after the Chatham House Accords, and then the fast track program starting in 2000. Second caveat, I will always only be focusing on the first reform throughout this talk because I have not figured out how to incorporate also the second reform into the econometric framework. Comments and suggestions on how to go about that are very welcome. Again, let's go back to the property rights regime, describe them very quickly. What does full rights mean? Formal titles, enforceable, defensible in a court of law, and most importantly, from what the talks that we've heard before, land is sellable. Partial rights, some dimension of incompleteness. For example, the land is titled, maybe weakly defensible, but not sellable. No rights is no rights. The example here for Mexico shows that until the Salinas reform in 1992, a lot of land was redistributed. Very little land was titled. So in our coding, from 1920 to 1992, Mexico was partial, I don't remember exactly, either a no rights or a partial rights country. We consider that type of redistribution. But from the Salinas reform that made land alienable, we consider it a full rights country. Data we use, well, I've just described the reform variables. This exercise only uses outcomes, easily available off-the-shelf outcomes between 1961 and 2010. We look at agricultural value per hectare and fertilizer use per hectare. And in our attempt at some macro linkages, we look at GDP per capita, agricultural employment share, and urban population shares. Land inequality is something I will talk about later. A very simple translation of my theoretical framework into one figure. Land redistribution is a shock to the ownership structure, and whether that shock translates into efficient adjustment or persistent wages crucially depends on the property rights regime at inception. Under secure rights, so with full formalization, defensibility, alienability, productive factors reallocate, and, well, you know the story. Under incomplete rights, especially in absence of alienability, this is expected to not occur. We studied two margins separately, which could also arguably be studied together. The extensive margins of just considering the inception of a reform, classic Soon and Abraham event study, using never treated controls. On the intensive margin, hence the amount of land redistributed, we use system GMM with a free regime interactions, free outcome lags, and collapsed instruments. These answer basically two different questions. So the event study identifies the dynamic response to reform onset. The GMM, the second specification, identifies the dose response slope to additional cumulative redistribution within an established regime. First result is that in terms of agricultural value added per hectare, reform is universally costly and starkly so. And surprisingly enough, full right country take the biggest hit, And this is probably due to the fact that working hypothesis is that redistribution efforts that grant full property rights happen in a very short time span. And this would kind of explain why the hit is big, immediate, but then kind of converges to the at year 15 here to where partial rights and no rights end up. On the intensive margin, we find that regime heterogeneity is in also the dose response. So the interpretation here is for within each regime for 1% additional land redistributed, the slope is and the effect size are different across regimes. And what is striking is that more redistribution done in full rights regime actually help to compensate the initial cost of reform, while in the no rights regime, the grave is being dug further. This, I am going to, reading these two margins jointly. So inception is negative throughout. Full right regimes take a big hit, then they attenuate. No rights or partial rights regime take a smaller hit, which persists. And the synthesis of these two results that I've just showed you is that starting is costly regardless of a property right regime. The dose response curve slopes in different directions across regime. And as a scale check, no rights countries redistribute more, not less than full rights countries. So this is not a magnitude effect that is going on. So heterogeneity in the response of redistribution is in the onset cost, is in the response function, and in the scale of the redistributive effort. This is a very, very dense slide. The one mechanism one would want to think about as a mechanism of all this is fertilizer use. And this is likely not the case. Full right regimes at reform inception basically do not take a hit in terms of fertilizer use per hectare. Partial rights regime take a huge hit that persists. We're talking about 57 percentage point decrease after 15 years. No rights, it's marginally negative, but not significant throughout. And then our GMM specification, adding log fertilizer per hectare should attenuate the effect if fertilizer were to be the mediator. This does not occur. So I have no way to test this, but the candidate, remaining candidate explanation is that allocative efficiency is effectively the channel governing these differential responses across property rights regime. Quickly going through some macro aggregates. This is GDP, log GDP per capita. Again, partial rights take big hits throughout. And in terms of structural transformation, variables that we look at, agricultural employment share rises, hence in all free property rights regime, with partial property rights being the 12 percentage points you see there. So, and urban population share conversely falls. So one can conclude that reform onset slows structure. Redistribution reform onset slows structural transformation. It does not accelerate it in any way. And partial rights are have the deepest, hence the most negative outcomes across all three macro outcomes. This is likely, at least my interpretation is that partial rights, at least how we code them, are the regime, the property rights regime that maximizes formalization of land. So you do have a title, but minimizes exit, hence maximizes the cost of exit or makes it de facto impossible. Just to conclude really quickly, redistribution is not just a distributive intervention, it is an institutional intervention varying across property rights regime. At the intensive margin, each additional percentage point of cumulative redistribution raises productivity and lowers it under no rights. Partial rights produce the deepest macro losses across GDP, employment composition, and urbanization. And again, this is the configuration that maximizes formal incorporation of land while minimizing the possibility of exit. And fertilizer is likely not the channel. Allocative efficiency is the most natural remaining candidate. At the moment, we do not have the data to test this, but I am very open to comments on how to go about this. The implication for, at least for cross-country research, is that land redistribution should look beyond whether a reform occurred or not and grapple with what was redistributed, so the amounts, and under which rights regime. Going forward, since the data we collected on land redistribution, as I mentioned, spans from the year 1900, we have started a pretty big program of digitizing and extracting the OCR, National Agricultural Statistics, yearbooks from the International Institute of Agriculture, yearbooks from the League of Nations, and colonial archival sources. This is an ongoing project. We need to figure out how to code also reversals of redistribution, for example, collectivization in China after the 1946 land to the tiller reforms. We need to still figure out how to code multiple redistribution episodes within a country. Of course, the elephant in the room, endogeneity, how to do about that. I have a couple of ideas. We'll talk about them in the next conference. Again, mechanisms are testing allocative efficiency is probably the most interesting of the extensions I will be able to provide. I'm hoping to provide as this paper develops further. Thank you very much.
Great. Thank you very much. Let's open to the floor for questions.
Very nice paper and very nice presentation. So I had two questions. So the first is, from the reforms that I've seen, that I've looked at, the land reforms, two things that seem to matter is, and I don't know in which regime that would fall, the full or the partial, is if there was a ceiling and how restrictive that ceiling was. So sometimes, so what I mean by restrictiveness, let's say that you impose a ceiling of 5 hectares and you redistribute the land above the 5 hectares. If the average farm size is 1 hectare, maybe that's not as restrictive. Mm-hmm. But if the average farm size is 4 or 5, then that's pretty restrictive. So how, and a lot of these redistributions did impose ceilings. Mm-hmm. And the second component is whether the landless got land or whether there was redistribution only among pre-existing landholders, like small holders got more land than others. And then related to the last point on the structural transformation, could it be capturing the fact that in some of these countries they differ with respect to labor mobility frictions out of agriculture and into urban areas? And maybe that's what, somehow that's correlated with the redistributive reforms, and maybe that's what you're capturing there.
Thank you. I think this is a really cool effort, expanding the Alberta's data across the globe. On the empirics, I'm seeing that you have 5 pre-treatment period and many more post-treatment event studies. So I'm just wondering if you can extend the pre-treatment, because I think the just from the trend and from the fact that you're using never treated countries as controls, we do have concerns about endogeneity. Yeah.
Easily done.
Well, I guess a couple of questions from me. So one, this result on the GDP is quite striking. It would be good to understand whether there is an impact on specific non-agricultural GDP. Mm-hmm. Should I think of that as placebo, where you should not find an impact, or should I find as a spillovers in which you think that the reform affects structural transformation movement across sectors? Unbundling a bit that result would be useful. And the other, I would guess that another feature that matters is the precondition, like who was owning land before? Is land redistributed from large private owners? Is it redistributed from government land, from unallocated land? What does your sample cover?
So, in our extensive collection of data, we're only covering agricultural land that was redistributed. To cover initial conditions, and this is a separate paper that we're doing, we're actually building from the World Census of Agriculture dating back from the 1930s, Gini coefficients from to test whether initial distribution actually matters for what happened after. And I don't know if that answers you.
So just because when you say you are only looking at agricultural land, you mean land that was privately owned by somebody else before?
Yeah. Because colonization of what was previously forests has completely different political economy drivers, and so we prefer to look at agricultural land exclusively. So we're not covering redistribution of urban land, colonization of forests, and so on and so forth, just to keep the construct as tight as possible, because already doing such a work across so many countries in such a time span is already difficult enough. If start mixing things up, it would be impossible.
Any other question from the floor?
Thank you for the interesting paper. You talk a little bit about land reversals and kind of counter reforms at the end.
Yeah.
I was wondering, how do you think about, because at least in the context of Latin America in the 50s to 70s,
Yes.
it is not only the counter reform, it's that actually democracy breaks and then it's generally like kind of a military dictatorship. So are you thinking that as just kind of part of the mechanism, or is something that you would like to control for?
Both. So, of course, in more advanced versions of a paper, conflict, regime reversals, both going from left to right and right to left will have to be controlled for, without a doubt. But also the inception of, we also want to look at the political economy of why a reform falls within one of these categories. I don't know if that answers your question.
Great. Anybody last question?
Yeah, probably I referred part of the paper you cite. So I was wondering how that dose intensity matters as you motivate that. To what extent that the dose matters for the topics you're concerned about?
Could you repeat that? Sorry.
To what extent you see the density or the intensity that you measure matters more than the reform, either 0 or 1 or not? Mm-hmm. Because most of the reforms you're going to roll out eventually. So to what extent the dummy variable versus the intensity matters, because you may have different results from their published papers.
My idea is then to estimate both. Now these are two different models, two different sets of assumption. Eventually I want to model the two within the same econometric framework, and then I will be able to answer your question. Otherwise I would just have to do back of the envelope calculations, which for every specific country, so I would have to know how much land was redistributed, plug it into my regression results, and then give you a back of the envelope calculation. Modeling the two margins together, extensive and intensive together, is the way forward. So hopefully next year or in a couple of years.
Yeah, I was thinking probably you have a general equilibrium price effect or some kind of sectoral interactions at equilibrium level. That might be one of the things you're thinking. I'm not sure, but I guess that maybe the scale matters.
Yeah.
Yeah. Good.
Okay, thank you very much. And Jeremy?
Third spreadsheet. Great. So thanks for making it at 5:30, everyone. I have two apologies to start. The first is that this paper isn't really about land reform, and the second is that this is a paper about 18th and 19th century colonial Ireland, and so it might be a little bit less policy relevant than what you've just been seeing. Let's try and see whether it opens. So where's the... So So how do I on my full screen?
Which one?
Just this guy here.
Oh,
Okay, great. Okay, so this is going to be a paper thinking about the state's informational capacity and its long-run impacts on local economic development outcomes. And so there's kind of a classic and a more recent empirical literature thinking about how what the state knows about its territory and its people matters for economic development. There's this recent JPE from a couple of years ago thinking about how cadastres, for example, prompt kind of long-run economic growth. And the classic story here is that these different interventions by the state, whether these are like censuses, cadastres, land registries, they support property rights. These property rights in turn support various mechanisms. This might be local investment, it might be reduced conflict, and then that prompts local development. And then a central component of how you might think about or people conceptualize this kind of informational capacity that we're going to be thinking about here today is like official administrative boundaries, kind of property boundaries. We'll be thinking today particularly kind of around kind of boundaries, but you could also think about cadastres, land registers, other things. Specifically for this paper, what we're going to be thinking about is to try and estimate what happens to local development when this capacity goes down. Normally you kind of estimate kind of increases over time, but there are lots of reasons why kind of capacity gets lost or destroyed, particularly in the wake of conflict. Basically, if the state's kind of knowledge of its territory or its people is reduced, does this actually meaningfully affect property rights? How does that shape investment and kind of local conflict, and how does that shape local development? Some of these implications we think are kind of unclear, particularly in highly stratified contexts where actually groups may vary in terms of the extent that they can kind of make sort of de jure versus de facto claims on the state to resolve disputes over property and leverage the state's information about land. This paper is going to use a natural experiment from colonial Ireland to think about two questions. The first is how do negative exogenous shocks to the state's kind of knowledge or understanding of territorial boundaries shape local development over the long run? And the second, which is kind of more of the work in progress, is to think about how these effects vary across dominant versus marginalized groups, where some of these might more easily be able to take advantage of state-sanctioned information sources. For a preview of findings, we're going to find some long run over about 150 years is what we're talking about here. Reductions in the valuation of particularly of buildings, the economic value of buildings in areas where the state loses information, consistent with less secure tenure, more disputes and conflict in these areas, and reductions in capital-intensive investments. And we're going to show that these effects are mostly concentrated among areas which are owned by the kind of the minority but dominant kind of group which had a kind of stranglehold on economic and political power throughout this period. So to take us to the setting, we're thinking about colonial Ireland, where between the 17th and 19th century, this was the so-called Protestant ascendancy. Following its colonization by England in the the mid-17th century, there was mass land expropriation and redistribution from Irish Catholics to English Protestants. This is regarded as basically the largest kind of land transfer probably in early modern European history. And it goes from a case where Catholics are more than 95% of the population and owning 60% of all land prior to colonization, to them owning about 15% of all the land within about 30 years' time, following its colonization by England. And then this kind of economic inequality was consolidated by the penal laws and a bunch of highly exclusionary political institutions, which lasted 200 years, such that there was this dominant minority which had economic and political control over the island. To facilitate the expropriation of Irish land, Ireland is where we find the first high-quality land map, at least in the Western world, basically characterizing land ownership and territorial boundaries down to the locality level. This is referred to as the Down Survey, undertaken by William Petty in the 1650s, And essentially, because the aim here was to expropriate all Irish land, they needed to know who owned what land where in order to facilitate its expropriation. This took the form, in the course of 3 years, of constructing about 1,500 maps of parishes, each of which is about 3 by 3 feet, and documenting, basically like a shapefile, documenting the shape of every locality, who owned it, their religion, the quality of the land, and the size of each of these townlands, which is basically like the locality. The townland here is roughly 1 square kilometre. The parish is about 25 square kilometres. Overwhelmingly, there is like 1 landowner per townland. This is, however, a setting where a lot of landowners, the largest landowners, owned like 300 plus townlands in terms of like their kind of economic inequality of land ownership is kind of extraordinary during this period. So this map is made in the 1650s and ultimately underlies all property rights in Ireland for 200 years. Historians writing about this still today say that it's kind of hard to understand how important this map was from a modern perspective. However, until the enumeration of the Ordnance Survey in the 1830s, this was like the ground truth of what constituted a townland and who owned it and kind of how big it was. There was only 1 official copy of these maps which existed, held in Dublin, and then until the Ordnance Survey in the 1830s, if there were property rights disputes to be resolved in court, it relied on consultation of the original parish maps. The concern here being that rich people could basically commission private maps to kind of expand their informal land holdings, and so these actually weren't considered as kind of like evidence in court throughout this period. However, what we're going to leverage empirically here is the partial destruction of a bunch of these maps in 1711 due to a fire in the archives that held them. So what happens is that a fire rips through the Surveyor General's office, fully destroys about 200 of these maps, 800 of them are unscathed, and then our empirical sample, as the basis of our empirical strategy, is going to be 400 odd, which are exposed to partial damage. There's a lot of debate under the colonial government about what to do about the fact that these like ground truth maps have been destroyed for a lot of these cases, and there are extended debate over the kind of interceding kind of century following about whether to commission like new territorial maps, because this becomes a problem for lots of reasons I'll talk about. However, the government ultimately is very concerned about the fact that so much encroachment and redistribution has happened after the destruction of this kind of ground truth territorial maps, that basically if they made new maps, it would just create chaos. And so the conclusion of the colonial government for about 140 years is to do nothing. And so there's a kind of a setting where for quite an extended period, there's actually only partial coverage in a bunch of different areas of the country in terms of the survival of like, you know, the shapefiles essentially for the country governing administrative boundaries as well as property ownership from this kind of this period of colonization expropriation. What does dispute resolution look like in areas, and this is kind of charting areas which were exposed to partial damage of the parish maps. Where these maps survived, basically this was used to adjudicate property disputes if court cases arose, i.e., you know, you would consult these maps ultimately, and then it would adjudicate on whether, you know, fairly precise boundaries. Where the maps were destroyed, dispute resolution takes on a more informal character, where essentially they just asked a bunch of older people in the community, was this person's land or this other person's land? Such that, you know, they would ask kind of committees of 12 men. Overwhelmingly, the population throughout this period is Catholic. Most of the landowners are Protestant. And this is consistent with, you know, map makers who are writing in the 1800s for much of this period. So what happens as a function of this partial destruction? A bunch of later government commissions highlight the fact that, you know, the fire takes place, but actually a lot of the sort of the hijinks are not confined to the ravages of the flames. That there are lots of examples provided in historical sources. For example, this is a nice one I'll come back to. Like a Blue Coat Hospital in Nodstown, Tipperary, had land holdings in parts of the map destroyed by the fire and parts of it which weren't. And essentially over time, they lost ownership of the part of the land that they couldn't prove was there to other kind of vested economic interests. So our empirical exercise here is going to be to leverage the partial destruction of these maps and estimate longer run effects on local development. Let me skip this in the interest of time. So our data then is going to be some measure of where land these maps were destroyed and not. Ideally, we would consult these partially destroyed maps. Unfortunately, they were all lost in 1922 because of another fire. And so instead, we're going to rely on a catalog, a map-level catalog constructed in 1813, which commented for every parish and every then existing and partially damaged map, it said the cardinal directions of that parish's map which were destroyed by fire. So every parish in the country, we can basically assign a cardinal direction, often multiple, to say some parts of this parish lost, some survived, and that would be our treatment and control. For our main outcomes, we're going to rely on, this is Griffith's valuation, which was the first comprehensive enumeration of land tenancies since the Down Survey 2 centuries prior. And it recorded for every plot in the country, the occupier, the kind of the lessor, description of structures on the land, and then the economic value of that land and the buildings. Using a bunch of kind of frontier LLMs, we're going to digitize for the first time about 9,000 pages of this, and we're going to geocode it, and then that's going to be our primary outcome measure. And this is all going to be defined at the townland level. And ultimately, we get data on about 350,000 plots. Other outcome data, which we'll come to hopefully, for measures of local economic investment, we digitize a bunch of measures from the first ordnance survey to look at kind of agricultural and economic infrastructure. And then for property rights, no consistent data on court cases survives anymore. And so instead, we've digitized a lot of deed registrations from the relevant registry, where the intuition here is that it was really costly to register deeds in terms of either leasehold transfers, freehold transfers, or your wills. And so a bunch of historical work is consistent with the fact that people mostly did this when they were concerned about future encroachment or they were facing contested claims over their land. And so we use this as an indicator that you'd only really do this if you felt you needed to. We have a bunch of pre-fire townland characteristics, which we use to basically establish like reasonable kind of orthogonality of exposure to the fire damage to pre-existing characteristics. So to illustrate treatment assignment, we use this comprehensive kind of like report of fire damage to the 1,400 parish maps. We reconstruct administrative units as they existed prior to the map for essentially about 400 parishes, which have partial exposure to the fire. And then we reconstruct the set of townlands inside all of these parishes as well. So this is an example from Ardmale and Tipperary. Nodstown is where that hospital was that I just told you about. And essentially for every parish map, we know the bit of the map which was destroyed in the fire. We then basically assign these maps into quadrants and we assign treatment on that basis. So here the northern part of the map was reported as being burnt, and so we assign townlands which we know are in the north to be kind of treated as well. There are obvious sort of like margins of like treatment intensity to think about. For example, areas which are closer to the boundaries of this physical parish map are more likely to be destroyed, so we mostly focus on areas around the edges of the parishes. Similarly, it's a bit arbitrary that we're using 45 and minus 45, and so we also kind of focus on areas a bit further away from lines kind of differentiating treatment and control. But we flexibly do all of this as well in the appendix. Our sample then comprises about 4,000 historical townlands across 349 parish maps and 64 baronies. 31% of these we assigned to treatment, i.e. they fell on the bit of that parish map destroyed in the fire. And we estimate this including parish map fixed effects. So we're always comparing subsequent outcomes in townlands which were versus were not on the part of that parish map which was destroyed. The identification here is pretty straightforward, and we establish that holding fixed the physical map, kind of the destruction of these records, and we do a bunch of balance tests here to establish that it looks pretty clean in terms of pre-existing characteristics of townlands which versus were not. Part of this is helped because all of these maps were often tessellated physically to fit on the maps properly, and so we actually don't have too much kind of geographical confounding, as it were. So our main outcomes then are going to be to look 140 years later in time at Griffith's valuation and establish kind of the economic value of these townlands overall. We also have plot level results. And so the higher level, if you just look at the Parson estimation, for example, is to suggest that holding fixed the map localities exposed to the bit on the map destroyed by fire have like total economic valuations around 10% lower. The effects are larger when we look at kind of the buildings valuation, like the total value of the buildings on that plot compared to the value of the underlying land. Much of that is because the land enumeration was meant to look at kind of underlying land quality, kind of hypothetical land output rather than what it's actually being used for, whereas the buildings valuation strictly reflects actual plausible kind of like local investment in structures. And kind of consistent with that, spatial fixed effects soak up a lot of the variation in land values here compared to what they do for building values, where building values are really capturing like the quality of the building constructions, what kind of structures are in these townlands across different parts of the parish. We do some kind of distributional test, and we establish using kind of by partitioning the plots within each townland towards the higher versus lower ends of the distribution. We find that most of the reductions in building effects are concentrated at lower percentiles of the distribution, consistent with the fact that there's just less, there are fewer physical structures in these townlands which had kind of, were treated. By contrast, looking at land, it seems to be somewhat the reverse. So some evidence on kind of understanding some of these long-run reductions in kind of economic valuation of these areas. We draw on evidence around the security of property rights using evidence on deed registration, and particularly overlapping deed registration. Reduced capital investment comes from evidence basically from the Ordnance Survey, and then we also have, this is where we're spending most of our time right now, is thinking about compositional changes in terms of who ends up owning land in these areas, where sort of authoritative ground truth information was lost. And so firstly, to think about insecurity of tenure. So the Registry of Deeds, as I alluded to before, was established only a couple of years before the fire, so we don't have much of a pre-period. We just estimate things in the post-period to say, later in time, across different decades, which are kind of stacked together, do we see more deed registrations, either leases or freehold transfers or wills being registered in areas where kind of like plausibly property rights have become more insecure because it's harder to adjudicate property disputes because now this ground truth legal document has gone. And B here is the diff and diff using a very short pre-period. They're pretty similar. So we find that there is an increase in terms of kind of deed registration. This is estimated all at the deed by the townland by deed by decade level, mostly driven by an increase in the amount of kind of leases being registered. Leases here were a minimum of like 30 years. These are very long duration leases. And we do a couple of different tests to think about whether these increases in registration of deeds is about more property being transferred between people. Firstly, secondly, whether it's about precautionary incentives, i.e. I'm now concerned about the security of my property rights, I'm going to register a deed to try and get any kind of legal claim, or thirdly, whether this reflects competing registration of deeds, kind of competing and overlapping registration of deeds. This is kind of what the temporal span looks like, where most of this effect is really kicking in sort of the mid-18th century. And out of those three explanations, the most evidence we have is that a lot of this is actually about people making overlapping registrations of deeds pertaining to the same underlying plots of land. And so, for example, we find increased incidences, particularly of people kind of registering leasehold deeds in the same year with different names and the same locality, which you wouldn't really expect, given that most of these townlands continue to only be owned by one person who should be making the leases, as it were. Secondly, on reduced investment, we find increases in the share of kind of the incidence of just unproductive plots as a function of treatment, increased incidence of not having any buildings on a plot, and much of this is actually driven by having more swampland and bogs in areas where property rights were weaker. Getting rid of these swamps and bogland was actually a huge issue in 19th century and 18th century Ireland, it turns out, and was rendered particularly hard where property rights were weaker. Regarding economic infrastructure, we find like modestly reduced levels evidence for kind of agricultural and industrial infrastructure as enumerated in the Ordnance Survey in the 1840s. And then thirdly, we're still working on this a bit to think about the religious kind of composition of landowners and classification there. But for now, what we do is to look at how effects seem to vary in terms of whether this affected people who had like more geographically dispersed versus more geographically concentrated land holdings. because absentee landlords were a huge issue throughout this period, i.e. people who had like massive territorial swathes of land, but were potentially found it quite hard to monitor what was happening and monitoring encroachment. We basically find a reduced incidence of people with territorially dispersed land holdings later in time, and we can also estimate head effects using land ownership data from 1670, so before treatment, based on whether these were like large geographically disparate landowners or whether these were people with very geographically concentrated land holdings. And most of the reductions here are being driven by people with like kind of sprawling estates, which were potentially quite hard to monitor and were overwhelmingly sort of Protestant elites. So just to wrap up, this paper is thinking about how the loss of state-sanctioned property boundaries and admin boundaries in this setting seemingly reduced local economic valuations, had some impacts on investment and tenure security as inferred by deed registration patterns. Most of these effects seemingly accrued more to these absentee property, like large Protestant landlords who relied potentially more on the de jure property rights protections, given that they were more easily able to make claims on courts and so on, compared to their overwhelmingly Catholic tenants, with broader implications, we think, for thinking about how changes in state capacity have these sort of distributive implications in settings where there are these sort of social stratifications as well. Thank you so much for your time.
Great. Questions?
Thank you. Super cool work. Just out of curiosity, like, do you see any impact on conflict, like crime or
Yep.
I don't know, like violence in general?
Yeah. Most of the problem here is that there aren't any surviving historical sources which are assignable to the town level for this period. So there is a lot of, they're called like disturbances or kind of basically like low-level conflict throughout this period. We don't have the data on it. The fire I alluded to, the second fire I talked about, that wiped out the entire National Archive in 1922, and so historical sources, which are sufficiently granular for us to use for the design, are pretty limited. One thing we thought about for some of this stuff is that we can in principle aggregate up and think of this as kind of treatment saturation of how much of the parish was destroyed. Part of the issue, though, is that it's very hard for us to tell where maps were fully destroyed or not. And so we have and so we're still thinking about this a little bit, but basically we have data on that at the parish level, but not at a level assignable to treatment and not. So we haven't looked at it yet, but it's something we would love to look at.
So if Catholics were able to sort of reclaim some of the land, did this have implications, like future implications and other outcomes? Because it sort of stopped or curbed a bit the appropriation of their land by Protestants?
Yeah, so I mean, all of the appropriation had basically happened by treatment, and in practice, yeah, we're basically in the process right now of trying to classify the relation of all of the names in our data, but it's proving a little bit annoying. And so in principle, you know, we actually have land, we actually have all of the ownership data from before colonization, and so in principle, you can look at like who is owning land, who is reclaiming land over time, which was expropriated from them. We haven't looked at it too much yet. These are obviously important data. This is kind of what we're really working on.
Super cool, by the way. It's amazing.
Thanks for the nice study. I was wondering, so people probably weren't told that their parish map burned down, right?
Yeah,
so, I mean, the way they'd find out was there's probably some court case or some conflict, but you don't have court case data, right? So I'm just guessing that the problems would be, you know, the places where there was going to be more conflict, you know, they found out earlier and that led to more problems and it kind of cycled. I'm just hypothesizing. I mean, can you look at it by land concentration where there would be potentially more conflict if a few people own more or more ethnic divisions to try to understand some of that dynamics? Maybe you're getting at it there, but
yeah. So I mean, this is only just getting at, you know, it would be bizarre, for example, if we found a treatment effect in the decade of the fire, because you're only going to find out about this if there's an issue, and then you have to consult these records and they're gone, right? And so it clearly takes like a while to sort of kick in. The points on like ethnic, so it's an interesting point. Part of the issue is that by the start of our treatment, basically 95% of the land is owned by Protestants.
Right.
And so there's not a ton of local variation in terms of this. We have some incomplete data from the 1659 census, which we could potentially use, but it's very incomplete, to think about kind of like, you know, ethno-linguistic fractionalization or something like that. This is a dimension we're trying to push on more, kind of also for the previous question, to think about like, how some of these local spatial dynamics may have contributed. Court cases, there are records of them, but they basically don't, they are only assignable, and the records that still exist are only assignable, which is a barrier level, which is way too high for us. And so, and also, none of them have been digitized, and so it'll be a big lift.
Yeah, you can only do what you can do.
Yeah. Unfortunately, it turns out there's a lot of people are interested in Irish economic history, and so a lot of this has been thought about by others as well.
Yeah, a very core setting and core data. So I was wondering how that's related to within the country, how the people migrate or reallocate, and how the economies will going to grow spatially differently.
Yep.
And so that may explain part of the equilibrium effects that now you currently cannot see something too much. But if you can explore that, it will be perfect.
Yeah, great. So we don't have too much data on sort of direct economic outcomes. There's no data that exists on agricultural output until post the Great Famine, which is basically kind of 1850s to 60s. So we're a bit limited in terms of thinking about kind of structural transformation or kind of economic questions. Migration, I'll think about a little bit more, because we do have these cross-sections at various points in time of people's names, and so in principle we could actually build something to think about where people are sort of sorting over time, which would be really interesting. I haven't thought about it at all though.
Another thing I may add is how long the satellite data can be used to study the crop production and other stuff, as the other one has done the production part.
Mm-hmm.
Yeah, I'm just curious. Yeah.
But sorry, what data, sorry?
The satellite data, I'm not sure to the current one. Maybe 50 years ago, you can still have that.
Oh, I mean, sorry, you mean like satellite data on land use and stuff?
Yeah.
Yeah, I'm not sure we'll go far up. I'm not sure we'll go far back enough for us. Yeah, I mean, we're putting a stop at 1850 right now in terms of our outcomes, because that's already like 140 years post-treatment. But yeah, good thing about it.
I should mention that we're in the last few minutes, so if there are questions also on previous papers, this is a good time to ask.
Thank you for that one. I do have a question for Professor Amopoulos. On your paper, I was just left thinking how, if I'm interpreting right, that the amount of land endowment a household gets, it maps directly to the amount of insurance they have. And then, if you include land sales into the model, are households buying land as a way to buy more insurance? And if there are households in your model that are underinsured or overinsured?
Thank you for the question. It's a very good question. So in our model, right, the way that it is right now, we don't have a sales market. There's only a land rental market. If there was a sale, then yes, because the amount of land that you own is basically the insurance device, then you could think of that like you're buying insurance. It turns out that in this data that we have in the Philippines, and one of the tables shows this, the vast majority of the land market transactions has to do with rentals. The sales are very low. So the rentals is like 12 times higher than the sales. So that's the justification of the way that we have it right now. But the model can be extended to allow for sales.
Maybe one question from me for Jeremy. So in the evaluation, it uses an outcome. the lack of maps was very salient to the evaluators, right? So should I think, I can think of two different models. One is valuation goes down for a blind evaluator who doesn't know that there is a previous map in some place and others, versus a model in which valuation is driven a lot by awareness of whether there is a previous registration or not.
Yeah, great. So, yeah, it's an interesting point because basically, like prior to the valuation, town boundaries were redrawn in like the 1830s, and they were essentially meant to use, to the extent possible, they were meant to just follow the boundaries set out in these maps in the 1650s. But obviously, where those maps were partially destroyed, it was harder to do that. And so, like, it's not directly getting any question, but like, there is some change in their mentioned size in the shape of townlands by the valuation, because there was a lack of continuity, there was a lack of understanding of where the boundaries were historically. So that's like one thing that we haven't quite figured out to think about, is that to some extent the outcomes we're aggregating everything to the pre-period townland, but there is, I mentioned there's kind of like, the unit of observation in the raw outcome data is post-treatment. Does it work? We know what they corresponded to in the pre-periods and around that. In terms of whether the Newt evaluators would have thought about this, my sense is no, because that exercise was done, the drawing of the kind of the boundaries, which are still effectively the official boundaries today, was done about 15 years prior to the valuation. And so it would be surprising to me if they were thinking about this other stuff. However, I think that the fact that admin units had potentially been post-treatment by that period, I think is something that we're still thinking about.
Yeah. So my question to Tassos is, like you have in your model you only have idiosyncratic risk, and in that sense land is a good asset. But if you think about aggregate risk, land is probably a very bad asset in these agricultural economies. So I guess, I mean, maybe it's a bit of an unfair question, but how do you think this could be thought of in the context of your paper or your model? So, like, it puts it's like what you find. I guess it's an upper bound on the amount of insurance you could get. That's kind of what I have in mind.
Yeah, I mean, that's right. That all these shocks that we have here are idiosyncratic. If you have an aggregate shock, so you mean like a weather shock at the village level. So then if that's the type of shock, yeah, you cannot smooth your consumption by renting out. That's true. Another mechanism that the model does feature that allows you to, even if you have an aggregate shock, to diversify against that is migration. So you could still leave and move to the city. So that's another mechanism. So basically, in the model, there are three mechanisms to smooth your consumption. One is the risk-free assets, the second is the land, and the third is migration. So for aggregate shocks, migration will still work, and for the assets, you can also accumulate assets.
Maybe time for one last question. Okay. Otherwise, thanks very much to the presenters and to all of you for a great session, and see you tomorrow.